Hello, folks. Welcome to the Born Trader. This is David Russell, Global Head of Market Strategy at TradeStation Group. It's great to be with everyone today. It is Thursday, January 29th, 2026. And today we're looking at currencies on the move. And that's been something that's been kind of building recently. And we're going to kind of cover this because it's one of the things that is emerging as a trend in the market. So, for a long time, currencies and foreign exchange were kind of a boring thing. They didn't move very much. We had a market that's focused on growth investing, things like software companies and all these different tech companies that did well for a long time. And that has slowly been morphing, especially in the last year. Also, don't forget that we are going to be appearing um, on February 26th at the Masterclass in Chicago. And if you're interested in joining us down there, not Chicago, I'm sorry, Plantation, Florida, which is near Fort Lauderdale. If you're interested in signing up, you can go ahead and click the QR code here. It's going to be on February 26th. I will be one of the speakers. I'll be speaking about options gamma. We're there with Jesus and some of the other guys from the CME and stuff like that. Matt Cashman um, from the OCC. So basically, the main thing I want to focus on today. Those are the main things I want to show in my slide. There's a workspace I created for you guys, and I think it's important just to realize that we had a long period of time. I'm going to look here at, for example, the 1 second. That thing changed on me. NE1H26. There we go. New Zealand dollar. But if we look here, you can see that in many ways we had a period where the euro essentially, we've been in this period kind of sideways movement for a while. And we got some big moves recently, and we obviously had some other kind of big moves. But the key thing I want to point out here is that we have been in a market that has not been a currency kind of moving market. We've been in a market that has been dominated by things like growth stocks and things like that. And we're starting to see kind of some new things developing. We had a big move in the dollar last week and wanted to kind of start to put some things on people's radar because this might be one of those kind of trades that people are going to be going to in the coming weeks. So I want to just kind of point out, if you look back a year ago over on tradestation.com on our blog, we did this article on market insights on May 21st of last year about platinum making a big move on Chinese demand. Well, platinum more than doubled since we wrote that. We wrote a lot of other articles at that time. If you look at some of our articles on futures, you can see throughout last year, as we saw the emerging activity in metals, we did articles like this to really kind of highlight it. And so I want to just kind of point out that these things are things that we do to kind of put it on people's radar so they're ready when the actual as the market evolves to actually realize, oh, wait a second, these things are happening. This is the trend. These are actually ways that people can participate in it. And of course, this is something where it's not the same thing as traditional stock and options trading. We're now in the world of futures, and I want to just point that out, which is really the DNA of TradeStation. It hasn't really been a big thing for a while because we've been in this kind of low volatile market for a lot of these different products that have only recently gotten active, like gold and silver and then metals as well. So I think it's important to kind of realize that you see things move in phases. And in many ways, the move that we have seen in gold and silver could in some ways be the kind of prelude to further movement in the currencies. And I think that's an important way to kind of think about it. Things move in kind of trends and in bigger movements. So I think this is something to kind of think about. Like Nvidia moved first, and now Micron is moving now. So the thing is, gold and silver might have moved. What's going to be the next part of that trend? And that is really, I think, a lot of kind of natural born traders want to focus on what is the next thing that's going to give a kind of potential kind of movement and trend that we can capitalize on. So I want to just very briefly mention, if you look, what's been happening with things like Microsoft today, and we've been kind of talking about this, how basically software has really struggled. We've been talking about this a lot for a few weeks now. And I think it's important to realize that this tells us when we see currencies moving and gold moving and metals moving and software struggling, it tells us we've actually entered a new kind of market. I think it's important to realize that. It's entirely possible that we have entered, to a certain extent, for technology and for American stocks, a bear market. And that bear market is more a question of being a bear market for high multiple secular growth stocks, like we've talked about a lot. I think it's important to realize that these guys have been the bread and butter of stock trading for basically the last decade or more. And we've entered something new here. And that's just important to realize that when you look at moments of time when when commodities are volatile, very often currencies are volatile as well. In the 1970s or the beginning of this century, Both of those times had a period of oil and metals moving, and also the dollar making big moves as well. So this is, I think, an important thing to realize. We've seen this pattern before, and now the question is, what is the next kind of thing to be focused on? So these are over here on my TradeStation platform. These are the big currencies futures I wanted to talk about. The euro. These is a weekly. I'm sorry. This is my issue. This is a weekly chart here. This is a daily chart now. All right. So we basically have the euro, the New Zealand dollar, the Canadian dollar, the Australian dollar. Um, you know what? This is my all right. You know what? This thing got messed up on me. I apologize. SFH26. I wanted to have the Swiss franc on there. The Swiss franc is SFH. So basically, there's a few ways to think about these. These are similar to S&P futures, but they're not exactly the same. So first of all, they start trading at 6 p.m. on Sunday night Eastern time. Now remember, with futures, a lot of the information is given in Central Time, Chicago. So I'm at heart a stock guy. My heart is in Wall Street, New York Stock Exchange, Eastern Time. That's just how I think about things. I think a lot of other people do. And the other thing at the end of the day to realize is that a lot of people focus on the stock market. That is going to be anchored to New York. And the other thing is that a lot of the economic data, those calendars, they're anchored to New York. So I'm going to just use Eastern Time. I hope that doesn't upset anyone. But realize when you actually go and you look at some of the literature, like on CME and stuff, the times are normally given in Central Time. So just realize that. So basically, they open at 6 o'clock on Sunday night and they close at 5 o'clock on Friday night. And then they basically trade 23 hours a day. So they basically have a break between 5 and 6 p.m. Eastern time. And then the new day, so to speak, starts at 6 p.m. and that's the following day. So like tonight, I guess when the market closes at 5 Eastern and then at 6 p.m. it will open, that's actually Friday. So that's the way they actually work, just so you realize the way these futures work. So the other thing about them is that so they also are quarterly, like the S&P 500 or the NASDAQ futures. They technically expire on the quad witching day, but they're not exactly like that because they have physical delivery, which means that basically they're going to have a last day of trading so people don't have to deal with that physical settlement. So basically what happens is they have a last day of trading. So you'll actually notice that the last day of trading is the 16th and 17th when quad witching day is actually, I don't have it in front of me right now, but I'm going to look very quickly. If we look to March of this year, quad witching day is the 20th. So the third Friday of March is the 20th, but these guys are listed as a last trading day a few days before. So just realize there's a few nuances like that about them that you want to be aware of. Um, the other thing is we also have a product called the dollar index. Now the dollar index is different because it's kind of the opposite of the currencies, but I'm going to show this one DXH26. But what's interesting about this is this one actually it opens at 8 o'clock on Sunday night and it has a 3 hour break between 5 and 8, but it also has a similar sort of expiration situation. So I want to kind of point that out. So these are some of the products. Now I would encourage everyone with futures to really understand them. Go to the futures margin rates on tradestation.com. If you click up here on where'd it go? Up here, there's currencies. Click on currencies, goes down, gives you the margin rates for them. You can also go to the CME and look at the future specs. I'd recommend everyone do that to know what they're kind of experiencing when they get into the world of futures trading is a little bit different, but the key thing is one to kind of point that out and remind people that's part of what TradeStation does. Futures is a big part of our business and our DNA. I'm going to hide myself so you can see my screen a little better. And basically, let's take a look here at this is my radar screen. I just set this up to kind of quickly highlight, and this is basically the dollar index. So the thing about these, I think, is just to realize is that these would be traded similarly as someone would trade something S&P futures. Just realize that there's slightly different breaks during the day. Now, another thing to realize about these is that these are kind of backwards. Some of them are backwards. It's kind of annoying. One of the things when you get into future into currencies is that they're not all treated the same way. So, for example, the dollar is quoted to yen. How many dollars? The dollar USD. How many yens of the dollar? Right, 153. But the euro is euro USD. It's upside down, right? So some of these things are like backwards, just to realize. And to realize that the future is always going to show the value of the actual product. It's going to treat like the yen as if it were basically like oil or something. So just realize that this is it's kind of quoted backwards. You'll see the yen is quoted as this goes up when the yen gains, but the common thing that people look at, which is the currency pair, this one goes down when the yen gains. So just realize that the ones that are backwards, I think, are I can't even keep them all straight. So the key thing is you kind of can build yourself a nice radar screen and just focus on it. The thing here I want to also just show you next is essentially just to realize that some of these things are starting to show some interesting moves, and I really want to emphasize this. So if we look at the euro over here, I have this weekly chart set up. This shows weekly percentage changes, and if you look here, the euro had its biggest move since back here in I think May. But I mean, this is actually very interesting if we look at this. What we've really seen is that we saw a big spike in volatility and movement. The dollar index had its biggest drop since back here in May also. And then we're getting back to these periods from back around the time of like Liberation Day and stuff like that. So we're looking at something here when if you look at these on a long-term kind of chart, you can see in some ways that this has been kind of uneventful here for a while. I'm going to actually pull up the dollar index on like a monthly chart. Wait, dollar index. They're just trading views a little bit easier sometimes. If you really look at this, look at the move this thing made between 2001 and basically 2008. This was a huge move. Basically, if you look after that, it had this tight range and then a big reset in 14, and then basically a sideways movement all the way through COVID, and then basically a more of a rally up when the Fed was hiking rates, and then another tight range. So this has been far less interesting than it would have been. But now that we're breaking out of this potential range, this is when things might get kind of more interesting. And that's the reason why we're doing this presentation on it, because now is when the movement is starting to actually hit here. So let's actually look at the daily chart of the dollar index. I think the most important thing here is if you look, we have this big down day. And then what do we have? We basically have an inside day and another inside day. This is a potential continuation pattern. So you see it has this low going back to middle of September. And under that, we're looking back several years to see where we are. We're back to levels from 2022. So this is something here where people look at this. It slams down, makes a new multi-year low, forms a tight little consolidation. And for people looking at momentum and stuff like this might be something they're looking for dollar to go down. And the main way people would look for something like that would be to focus on long euro. The euro futures would be something that, in that case, the person would want to be long if they think that this move will continue lower. The reason is that the euro is the biggest overall currency that we're positioned for that. So that is the key thing on the dollar index, I think, is the most important thing to start with. Now, if we also look on now I'm going to just show the currency pairs these are spot. I'm just using TradingView really quickly because I have some charts I've marked up. But look what we have here with the euro. It's broken above this level from September, and basically it's up to multi-year highs here. Again, broke out, and you'll notice how closely this matches. It's the opposite of the dollar index, but here it is. It's broken out to new highs. And holding here. This is something also where I think this is maybe telling us that after this period, look here, we basically have from June until January, 6 months of not much movement, and now a potential breakout in the euro. Another one we've talked about, and we did a trading view idea on, is the Aussie dollar. Now this one I think is very interesting for a few reasons. First of all, the Australians have some interesting news recently. And I'm going to get to that in a minute, but they've had some interesting catalysts as well, and they are exposed to metals like copper, which had an interesting breakout last night. So the Australian dollar is also something people looking might look for. Now, the thing about the Aussie dollar is way back at the beginning of this century, I can't believe how long it's been, but the Aussie dollar had this really significant move. I mean, this was something that there was very significant, kind of hedge fund momentum trading in this currency pair. I mean, it moved a lot. It almost like doubled against the dollar. And look at again how tight it's been. We're looking at a weekly chart here. So you can see how tight it's been. But now look at all this resolving and potential breakout to the upside. So this to me is something that's pretty noteworthy. If you look, we did do this trading view idea on it over here. And if you actually look at the way we marked up this chart, you can actually see right here, is the Aussie starting to move? Look at this. Look at these patterns here. You see these, and then if you look, you can see that it did kind of confirm continuation after that idea. So I want to just kind of point that out. That's the Aussie dollar, and this one is, I think, something people are looking at. Now I'm going to look here. I'm going to flip this around, the Canadian dollar to USD. Normally, just so you know, conventionally it's quoted the other way, but this is what the futures look like. All these I'm going to try and show them the way the future look. Um, the CA, the CD. Now remember, all these they also have these the generic continuous contract if you want to see them. And you can see also here, Canadian dollar here is back to a level where it's just starting to maybe challenge these levels here. This does not look terribly different than the Australian dollar before it broke out. So this is another one here. People might want. Oops, wait, that's cold. Sorry. The Australian dollar. Look at that ground up, pushed against the kind of 12 to 24-month high and then broke out. Look again at the Canadian dollar. Look at where it was. I mean, it's kind of not that different from where the Aussie was a few weeks ago. So this is something that's interesting here in the Canadian dollar. CHF USD again. This one is backwards. This is the Swiss franc. I mean, this is like very strange. It like has no. It pays like no interest. It's considered in some ways the safest haven in the world. But anyway, this is hitting an all-time high against the dollar. This is something people view as a safe haven, also kind of broken out of this consolidation pattern. I don't know very much about the Swiss franc, but it's an important currency pair that I did want to mention. And of course, the dollar. The yen, the dollar yen. I want to just mention this one. I'm gonna put it this way because I always look at this one as the dollar to yen. This is the way most people look at it. But the thing is that look at how it failed to break out on the weekly. It went up here and now it's potentially getting sucked back down. This going down would be compatible with the dollar going down. And so you could see potentially here dollar going down against the yen and the euro going up against the dollar. Those two things happening together would also be um, consistent with the dollar index continuing to the downside. If this move continues to the downside, then that means that the dollar yen moves lower and it means that euro dollar moves higher. So I want to just kind of point out those dynamics. And when you look at it overall, when you look at some of these other important currency pairs like the euro and the yen, they are kind of potentially, compatible or kind of consistent with what a person might look like if they see the potential for upside in the well, for downside the dollar and upside in things like the euro or these other currency futures. All right, so I wanted to mention that. Um, So, as you look at this overall, really quickly put this on your radar. Next Friday, February 6th, we have non-farm payrolls. If you look also out into the future, some of the things happening right now with the yen is the fact that the U.S. government has actually done some kind of collaboration with the Japanese to actually strengthen the yen against the dollar. There's been some conversation about the Japanese intervening to lower to push up the value of the yen, which means weakening the dollar. And there's also been talk about the Bank of Japan getting more hawkish and potentially looking for interest rate increases. So that's something to have on your radar. Also, the Reserve Bank of Australia has a meeting on the overnight of February 2nd to February 3rd. That could be something to kind of watch. People when talking about higher inflation, there's strong job growth, the move in commodities, people might be starting to look for more hawkishness from the RBA. Now, I'm not an expert in these things, but I want to just point out I'm looking at the catalysts and then I try and analyze them as and understand what's happening as you go into these events. Um, the European Central Bank, has a meeting next week, also on Thursday, February 5th, and that's about 2 hours before the U.S. market opens. So another thing, ECB coming up, Australia Central Bank both next week, so kind of be aware of that. And then the payrolls next week, like I said, non-farm payrolls on Friday, and then go out the following week, which I think was more likely to be probably the bigger economic event in the United States, which would be CPI on February 11th. So just kind of have those on your radar. So before we end, I want to very quickly mention a few things I think were interesting. Is it basically, we look at Microsoft today, it's obviously been the big mover in the market overall, but it highlights what we've been saying, which has basically been the fact that there seems to be money draining away from software companies. We've talked about this a lot, the price cuts and all that, the price target cuts and all that stuff that we saw in the preceding weeks. We talked about these things. Also, I just throw out there again, I mean, don't forget Palantir reports Monday afternoon. And, that is a software company that trades at a pretty high multiple. People might be starting to wonder about what happens in a name like that. So, I think the thing with Microsoft that was interesting is, they have basically, the more they rely on AI and open AI to drive their business, what's happening is in some ways they're relying on a customer that is not as consistently profitable, and it's also a single customer. So they're spending a lot of money to provide a business. That business is then lower margin, and then at the same time, the quality of that revenue long term might be less reliable and lower quality. So that actually what's happening is the quality of their business to a certain extent is weakening. They're spending more money to generate revenue from what could be a less reliable customer over the long run. So in some ways, it changes the overall risk profile of something like Microsoft, and it's one of the reasons why we're seeing this kind of weakness in the chart overall. So I think that's a big thing to be aware of. But then the other thing is, we mentioned this, and this is still kind of not been widely discussed, by Wall Street analysts or anything. But I think it's a story to put out there. If you look at the Microsoft's numbers, their Windows business grew by 1%. At the same time, Gartner said in Q4 that PC sales rose 9.3%. So we've been saying also that there is basically an emerging trend or an emerging narrative in the world of tech and gamers, that there's been a shift away from Windows. Not big fans of Windows 11, but also some things happening in the world of Linux, that there seem to be the beginnings of some potential kind of, market shifts and things like that. But just you put all that together, and it's not to say that like Linux is going to have a huge impact on Microsoft near term or anything like that, which I'm not saying. What I'm saying is when you have a company that trades at very high multiples, people look at that and they just say it shouldn't maybe trade at such a high multiple. The quality of the business, like the thing I said about OpenAI, and the thing about the spending more on the capex and stuff. What it both basically means is it means the market will view that as being less of a high quality business, which then merits lower multiples. So it means that the company can keep growing and it can still potentially have weakness. And this is what's happening across software. These things trade at such high multiples. People are looking at other things. They're looking at global stocks. They're looking at commodities. They're also looking at some interesting sort of industrials and other kind of stocks that before were not on their radar. So I think that those are all things to kind of think about. And don't forget Palantir reports on Palantir reports on Monday afternoon. A lot of options volume in a name like that. Something is a name people might want to actually start thinking about. We will potentially talk about that on Monday when we have our State of the Market webinar. Don't forget, 2 o'clock Eastern time on Mondays. You do State of the Market webinar, and we look across all the kind of indexes and things like that. And in some ways, the last thing I'll just say, if you look, we basically had talked at that time about how there was this kind of resistance zone. We've talked about this a lot on the NASDAQ, this resistance zone from back here in October. This is when NVIDIA hit 5 trillion, and look at how it turned into resistance again. And the last thing I'm going to just mention very quickly is we now have here this is the energy sector. And, look at this energy sector today. Let me, I've got all this junk on here. Wait, you know what? I don't have it. I don't have it in front of me. The energy sector broke out to a new all-time high today for the first time since 2014. So things are happening, things are changing. It's a new kind of market. When you look at things like things like oil pushing higher, energy pushing higher, metals pushing higher, currencies moving. This is not the same market we had in the last 10 years. And just want to remind you, people, that currencies are part of that. Currencies have futures. TradeStation is built for futures traders. And this is something that maybe you want to kind of think about and kind of start putting onto your radar, because like I said, the last thing, actually, I'll just say last thing look at is the dollar index on the weekly here. It does potentially have some space down to these levels from 2021. So if that were to come into play, this could give some space for all those things to trend and give some movement. So that's the last thing I'll say. I'll see you guys on Monday. Have a great weekend. Thank you very much.